Good morning. Thanks for being here today. As Pam just said, my daughter Emma's in the crowd today, so I decided to tag along. And to be more nervous than anything is having my own daughter sitting here. So I just told her, don't smile at me. So anyway, with that, let's just get right into things. Paul just got done with his presentation. We were chatting on the side a little bit. This is going to be a year that producers need to have a marketing plan. I'm not going to give you any numbers that are going to make you feel rosy about the situation either today. Things, even though we've had some opportunities here in the last handful of weeks in the markets in terms of where things are. So let's just kind of get right into things. So first off, corn market, let's just touch where it is. We had a low put in August. We've had a nice demand-driven rally. There's two things that move markets. Low supplies or a supply situation, and then things that give this corn market, like we're seeing here, this nice steady climb all the way up from those August lows, and that has been good demand. A lot of that was thought maybe possibly precursor into the Trump administration as importers are bringing those extra bushels or getting them secured in the case of a trade war type situation. So we'll see as we go forward on that. On the soybean side, soybeans have built a good base, but obviously the big overhang, despite this most recent rally, is what's going on with that South American crop. When did those bushels get here? Again, I don't think people can fathom the amount of bushels that are coming out of that region of the world on a. We'll talk about that as we go through things. Right now, I would say in terms of prices, though, producers are a little bit optimistic here. Again, in terms of the movement of price. Now, Paul just gave out those break evens in terms of where they are, and those national numbers are not very good, and producers know that. Again, they're tightening the belts, but the market's moving. There's a little bit of optimism that maybe this can get somewhere, that it can give me an opportunity to have a decent year, or at least a profitable year. But there's a lot of things that we'll be watching as we go forward. Going to focus mostly on 2025, not so much to where we are, but what are we watching in the office? What are we talking about? The producers talking about with us. First off, does this demand pace remain? That's going to be a big focus. We've been seeing strong sales. I'll touch on that. Does that stay together as we move through 25? What's going to be that impact of that South American crop? When does that crop get here? One I'm going to talk about grain stock out. We just had a USDA report that severely chopped corn carryout, but there's something going on with the big picture that we need to focus on. Also the potential acre battle, what's going to be happening in terms of next fall, and then obviously just the overview of the macro side of things. I'm not going to spend a lot of time on that, but at least touch on it a little bit for you, what we think about. Let's get into that demand pace. First off, we're looking at corn, soybean export sales. I remember last year standing in front of you at this conference saying, boy, I hope somebody buys something. Okay, well, they did. Okay, when we got down to that $4 level in corn, we saw the buyers really start coming in, mainly Mexico buying. Okay, then the soybean side finally kicked in here as well. Again, our Chinese purchases started to show up, as well as other importers that kind of stayed out of the market last year in terms of both corn and soybeans, to the point where we were talking in August, some of the worst sales on the books in history to now. 10 years on corn, 6th best in the last 10 years on soybeans. So that's the question, does that maintain? Now, the last couple of weeks of export sales, we've started to see things kind of tail off a little bit. So is that the path for the next basically handful of months, or are we going to continue to see those buyers come to U.S. shores? A lot of variables come into play. That maybe people don't talk about is the currency side of things. Obviously, the U.S. dollar index is something we worry about when we talk about commodities in general. We've had a strong run in the dollar index. Some of that is a precursor to the Trump administration. Today, in the last couple of days here, last week or so, we've seen that dollar kind of peak out, actually a pretty big break in the dollar. So that may be some of the reason we're seeing some money flow in the commodity sector here over the last couple of weeks. The other side is what's going on with the Brazilian real. The currency out of Brazil. They are going through some major economic shifts. They've been selling extra reals into the marketplace, and that has basically driven the value of that real very, very low. Now, how does U.S. producer? We look at a chart, we say, hey, we get $10 or $10.50 a bushel. Because of the currency exchange, the Brazilian producer is getting $12 to $12.50, about $2 a bushel difference in terms of their price. Why? They sell in dollars, they buy their inputs in reals. If the dollar has that rate have more reals to spend in terms of purchasing. So again, makes the Brazilian producer more effective in terms of profitability. So that's a big trend that we see. And a lot of times movement in the grain markets in terms of soybeans especially is based off the movement in that real and the Brazilian currency. So with that factor, again, those South American supplies, again, we just had the USDA report here just a week or so ago, made big adjustments in the US side, which I'll touch on. Didn't do anything in terms of the South American crop, but the biggest thing, take a look at on that USDA world soybean production map, we're looking at a 29 million metric ton jump in soybean production on a global scale, okay? Right now, Brazil and Argentina combined, we're looking at about 13% more bushels coming out of that region. And still with that, even though we saw a major production cut in the United States in terms of a bushel per acre for soybeans because of that dry weather in the fall, 0.6 million metric tons on the year. So the global soybean supply is going to stay extremely heavy. That's going to make it very difficult for this market to maintain longer-term rallies, barring other issues that come into play. We look at that, our global carryouts, our global ending stocks. Obviously, the soybeans, as we're looking at the highest carryouts in terms of stockpile available on a global scale ever. Okay, and a significant move higher than where we were last year. Now, stocks to use, that's the blue line, again, one of the highest ever, which that is that amount of bushels that is available for the world supply that is out there. Again, user of soybeans on the export market or the global market is China. We've actually seen them kind of pare back a little bit in terms of some of their purchases, obviously here from the United States, replacing them with Brazilian supplies, but just in general, as soybean stockpiles have been building in Brazil. On the corn side, things are very manageable. Of where we are on the global scale, in fact, maybe even a touch tighter, like the stocks to use story there in terms of that regard. Right now, the U.S. market is the best market in town for corn sales, corn exports, and things of that nature, and we've seen that continue. And that'll stay this way probably until we get into the early summer months when that start coming on board. So when do those South American supplies arrive? That's always the big focus of the market and their prices. As we look at the soybean side, we'll start over there. Brazilian beans, we're seeing early harvest now, but the big bulk of harvest will come in the April-May window. And then Argentina, end of April into the 1st of May when those bushels come on board. You know, right now in terms of where we are in market prices with this most recent rally, now we've seen some jump in prices in the Brazil price recently, but they're right now trading about 80 to $1.20 a bushel underneath U.S. beans on the export market for the April and May. So again, we're kind of expecting soybean sales here in the United States to basically come to a standstill, with the exception of some fill-in bushels that we occasionally see. A lot of times you'll still see a Chinese sale here or there for bushels for soybeans. They use them for blending. They'll buy the Brazilian beans in, buy high-quality U.S. beans, blend them to get the quality of the soybean for their meals and their processing situation. So on the corn side, again, that's more of a summer story. That big Brazilian second corn crop, that's the one that is exportable, 73% of their production. That's where we fight the battle in the export market. That comes in that June-July window, as well as then you got the crop, which will be coming in late spring. Over the last couple of weeks, the market's really been moving a lot. And regarding the Argentina weather as well as Brazil weather, this is now a new weather market. Some of these historical trends, as you look in the marketplace, have changed, obviously, because of the amount of production we get out of those South. Again, so now we actually have a second time of the year, which is here, which is now the Brazil South American weather story. We have some dryness in southern Brazil as well as into Argentina, as you can see by the most recent soil moisture maps, but rain has been moving into those areas. Now, over the weekend, we get some rain in those regions, which is the main Argentina producing area, but it was not as much as anticipated. That's got the market moving. The other side of the story that's talking today, the Brazil crop got planted late because they were dry at the initial. Okay, now they're a little late on harvest, plus they're dealing with some wetness issues. If you see the socials, there's some pictures of beans sprouting in pods. We see that every year. But the problem is harvest is delayed. The beans aren't getting to the ports. The boats are there waiting for them. Prices are lifting right now, and that's helping push the soybean market with the strength that we're seeing here today. Big question for me, though, I talk about is grain stocks and carryout. came in here recently on their last January report, 3.8 bushels per acre off the U.S. corn yield was the largest January cut in yield ever. Took a bushel per acre off the soybean crop. Again, merited or unmerited, we'll figure that out down the road, but it really made a major change in that U.S. carryout supply down to 1.5 billion bushels. You know, this last year at this time, we were talking 2 billion, almost 2.2 billion in terms of supply that was out there. Now, remember when we talk grain stocks, that is a August 30th number, or the end of the marketing year number. And that's not reflection sometimes of where we are. That's that combination of where demand is. Same thing on the soybean side, 380 million bushels, again, after a bushel per acre cut in yield. Still one of our higher carryouts in the last handful of years, but at this standpoint, but a lot better than that 470 million bushels we were talking about just a couple of weeks ago. My focus is on the grain, probably more on the corn side. Grain stocks came out at 12.1 billion bushels in terms of available supply on December 1st. And if you just look at the historical side of things, last year we were at 12.2, 11.8, 11.8, 11.8, 12.3. In other words, the bushels that are out there are very similar to 16, 17, 18, 19 when prices were 450 to 350. So now, if the demand falls apart, and that my kind of gut feeling right now is the USDA made this big cut on demand, or excuse me, the big cut on yield, dropped that carry out, that might be our lowest for the short term. And then we get to February, demand's off by 25 million. Now we're up another 25 to 1.565. Okay, and then we get to April, demand's still slowing down. Now we're 1.6. And it keeps growing. Add into that the potential acre battle that I'll touch on in just a moment. You know, things get a little bit more for 2025 in terms of the corn market. Soybean market, as you can see, fairly steady in terms of its carryout supply or stockpile supply. You know, to me, it's all going to be about the South American crop and how that falls into the demand in terms of what those prices are for producers. One of the other things that kind of validates this nice rally, we're poking at $5 in a couple months today, May and July today for corn. So, okay, March futures are higher again today. The cash market in some areas has not followed suit. Yeah, that tells me there's enough supply out there. One of the sources I talked to, he basically works with commercials, are now covered basically through March in terms of their supply. So the producer, even though we've seen a price rally, we're not seeing that reflected in terms of the cash market. I'm going to jump ahead a little bit here. The potential acre battle is something that's also very, very key as we go forward. Right now, as Paul was talking, margins are tough. Corn margins are good. The market is basically telling producers to walk away from soybeans. Take a look at our historical side of things. Again, acres, we go plop a 95 million acre number, 96 million next year for corn. We're going to have a big supply at the end of the year, which I think could really weigh on prices in general. The macro, we also watch too, what's going to happen with policy. We had the 45Z policy just come out here right at the end of the year. Now they're kind of kicking the can down into the Trump administration to see what to do with it. But that sent the soybean oil prices skyrocketing with the possibility of that tax credit the market was waiting for months on months until the Biden administration finally came out with something here. Lastly, the macro environment. Oops, I think I hit the wrong button there. My apologies. You know, the money flow, right now money is moving into commodities, okay? We like to, the money wants to maybe own commodities here. Is it because of the Trump policies being pro-inflationary? That is something that we're focusing on. Where we are now long in soybeans, now almost record long in corn. So if the money decides to walk away, that could be something that weighs heavy going into the end of things. I'm just going to jump right to my last couple of slides. I got Pam leaning on me over here, so I know I got to get done. First off, keys for marketing on corn. Keep balance this year. Stay disciplined on targets. Make sure we're focusing on protecting what's in front of us. I'm defending 26 right now, or 25 right now. Let's build that floor and hope we're wrong. Soybeans, very similar. Tough market, because right now there's not a lot of meat on the bone for producers. So again, we're just talking with them about building a base, find a ways to re-own if the market gets cheap. Just stay aggressive in our marketing plan. Again, like I talked about, producers are looking a lot more corn acres than bean acres. It seems to be the chatter I hear out there. So we'll have to see how that plays out going forward into 2025. With that, thank you very much. Have yourself a good day.